All right, welcome to this week's market recap. A lot happened this week. We had the CPI number, which is the inflation number. It's definitely a market mover. We had the PPI number, which is Producers Price Index that came out. Tons of earnings. Companies like Disney, EA, they all reported their earnings. So lots to unpack here. Let's get started over here. Today was an interesting day. We had initial jobless claim that came out a little hotter than expected. More people lost their job, basically about 264,000, and the estimate was around 240,000. So the market kind of gapped down and then worked its way into the green territory, at least for Nasdaq. So let's take a look. Let's take a closer look on the price action today. So gap down, tested the low of the day, and then we moved higher on the S&P. Nasdaq we finished just a slightly green, and then the more sensitive name to the economic condition, IWM, which is a small cap, closed the day down about 77 basis points. At the same time, the price action in Bitcoin is very interesting as well. It's now down about 2.5% since yesterday in the 26,000. So, we were talking about Bitcoin being in a range between the 28,000 and the 32,000. It seems like it has broke out of that range, broke down from that range, and it might actually move lower. So on the economic calendar, we had a pretty kind of uneventful Monday. We had the loan officer survey, and as expected, we knew that there's going to be kind of a credit crunch. Loan officers, people working at the bank giving commercial loans, personal loans, are going to be less likely to loan, and that's what the survey showed. On Tuesday, we had NFIB business optimism, which gave one of its lowest reading actually in the past 2 years, on par with the COVID lows. Yesterday was the CPI day, so the inflation number was really the market mover. And then today, we're recording this on Thursday after hours, we had the initial jobless claims that kind of moved the market, as well as the PPI. So without further ado, let's get started. So kind of our agenda, I'm gonna show you a few charts on the CPI numbers and talk about CPI and why I believe it's actually kind of it was interesting and why it was really promising, especially for that TLT trade we've been talking about. I'll take a look at PPI numbers, and I'll show you some data that PPI actually leads CPI by about 3 months. So when we think about PPI and CPI, we know PPI is Producers Price Index. So this is what, if you're a business person over here, this is how much you're paying for input into your business. And then you make your goods, and then you sell this good to the end consumer. So if you got the end consumer here, CPI is really what's measuring over here, right? So we know if this guy is paying lower for its PPI, if this guy is paying lower for his PPI, the cost of his end good is probably going to be lower, so it's going to be saving money, so that would be passed on to the end consumer at a lower price. So these kind of really move along together, and the PPI number actually came a lot better than expected. That kind of shows that, hey, CPI might be coming down as well. We had the initial jobless claim, and we're going to take a look at next week in earnings season and a few trades that I set up for my own portfolio that I think could be interesting for folks watching this video. So let's start with CPI. You can kind of see that the blue line is the Atlanta Fed core sticky CPI. So these are mostly services, and the white line is if you exclude shelter. So if you take out the owner's equivalent rent component of the inflation, you can kind of see inflation is quite strongly actually is heading down. But if you keep the shelter in there, you can kind of see, okay, we're hovering around this 6% and we're not making a lot of progress. Again, this one was also very interesting, and this is basically that shelter component. The white line is the shelter component of the CPI of the inflation, and you can see the way that the Fed measures it is actually heading up. It's going up. But if you take this out, so if you believe the housing has slowed down tremendously and it's going to show itself into Fed's data over the next 6 to 7 months, what you will get is this blue line. And this blue line, what it's basically telling you, if you date it back all the way to 2010, it seems like, okay, we're going back to that range of 2.5%. So that's really, really promising. The good thing about it is that we actually do get a lot of real-time data when it comes to rent and rent prices. So websites such as Zillow will give you kind of their real-time month-over-month, year-over-year measure of how expensive the rent is getting. And this is Zillow's rent index, all homes year-over-year. You can kind of see was at some point 15% year-over-year, and now it's coming back down to that 5% range. So if you believe this Zillow number will show itself in the CPI over the next 6 months as Fed samples more newer and newer homes and newer home rents into this sample size, then you should actually believe that the CPI is going to come down to the 3.5% mark. And again, there are more data showcasing the same thing as well. So this one is rents in New York City. And of course, we had this big jump over here, but now you can kind of see it's slowing down. And on a month-over-month basis, we're heading lower, heading in the right direction. And this was basically the drawing that I did. So I said, if you got a producer over here and he's paying lots of money for his goods, he gets the goods, he packaged the goods and then sell it to the end consumer. If the costs are getting cheaper for him, he doesn't have to pass it on to the end consumer. So, PPI, if you advance it by 1 month, what you will see is actually with about a 3 months lag, it follows CPI with about a 3 months lag follows PPI. So we just got our PPI number and PPI came out at about 2.3. So that means by midsummer, the year-over-year figures should be somewhere around, 2.5 to 3.5% if you give it a little bit of a room for error. So inflation should actually come down. So all this stuff sounds cool, but what does it mean for the market? So we know that means for the market that inflation is coming down. So inflation coming down is actually good for bonds. So let's go to our trading terminal. Let's pull up the chart of TLT. That's the long-term bonds, and see how the price action is doing. As you know, one of the things that we've been doing, especially on TLT, has been selling premium. So TLT has been really in this box of 102 on the lower end and 109 on the higher end. That has been kind of going up and down in here. And one of the things we've been doing is we've been selling premium on the lower bound and we've been selling calls on the higher end. We believe by the end of the year, actually, we're going to break out of this range, and our price target for TLT is 120 by the year end. So that's one of the things that we're quite bullish on, and we think we're going to break out of this range. Again, today we had a massive gap up in the TLT, which means the yield actually came down because of the job numbers that we got that were a lot weaker. What about SPY? On the SPY, of course, we haven't done anything in the past 2 years. So when you bring the chart of the SPY, you can kind of see we are making higher lows, which is promising. So if you actually take a look here and compare it with the October lows, we came back. January we made another low, but this time a little higher. So if you're into technical analysis, and then in March we made another low, but this time this low was higher than this low. So every time we're making higher lows, this is actually quite a bullish pattern. So let's see if we're gonna make another low and this time it's gonna be higher than this low. That kind of confirms your uptrend move. So it seems like SPY is trading slowly grinding higher, but still the box is very clear. We haven't done much. We're going up, going down, going up, going down. So one of the things, again, we've been doing with SPY is very ideal for selling calls on a higher bound of the range and selling puts on the lower bound of the range for continuous income and trading opportunities. And lastly, ASML. ASML was quite interesting as well. This is a semis. Again, ASML as well, very similar to SPY and other semis. This has been trading in this narrow range. So let's showcase the range. On the higher end of the range, you're at about 700, and on the lower end, you're about the 580 mark. So it's been trading between 700 and 580. So one of the great opportunities here is selling some calls at the 700, waiting for the pullback, and selling some puts at the 580 mark. Again, semiconductor overall a more volatile stock, so premiums that you receive here are actually a lot better than other stocks. And that's about it. So if you go out to our calendar page on the earnings side next week, we have a lot of the retailers actually reporting. So on Monday you have Target reporting. Tuesday you have Home Depot. Thursday you have Walmart, Foot Locker on Friday next week. So a lot of the retailers will actually start reporting, and this is going to be interesting. They're going to give a big view of whether or not the economy is actually slowing down or not. And on the economic side next week, we have retail sales number coming, a bunch of Fed speakers, and yeah, that's about it. And then continuous jobless claim and initial jobless claims on Thursday. Again, give you that window of what's happening with the job market. And I guess on Wednesday, the 17th, the housing starts are going to be interesting as well to know, okay, how much housing activity is picking right back up. So a lot's been happening. We got a few updates coming to our trading terminal. So we're launching a new simulator with a limit order and ability to put limit orders, set a stop loss, profit targets, which is going to make our simulator the first web-based simulator with that ability. We're really proud of it. We're excited to share it for you. And we got tons of new courses coming in the academy as well. So definitely stay tuned. We're improving things a lot, and thanks for your support.